Good morning, everyone. Today is Friday, January 21st. I'm Marv Eisen of Timeless Dollar. And today, starting out the day looking at the economic calendar, we see the only announcement is going to be 10 a.m. leading economic indicators. And the forecast is for the indicator to come in a little lower than the previous month, but it's not going to be market moving, so we can move right along to our morning news. Legs are all in the red after yesterday's bloodbath, but that's to be expected, although we may have a bit of a attempt to a recovery today, or at least the bulls might try to see if the bottom is anywhere near. I don't think so, but of course nobody has a crystal ball knowing where the market is going to go. There is one significant news item I want to point out to you, and it's not about Peloton, it's not about crypto, it's right down here. Meatloaf, Marvin a Day, passes away. If you don't know who Meatloaf is, he's one of my favorites. Did Bat Out of Hell back in, I think, 1977 with Jim Steinman. What a fantastic album that was. So rest in peace, Meatloaf, and you did yourself proud. Moving along to the markets. Now, this is the daily S&P, not the E-mini, not the micro E-mini. This is the S&P on a one-day candle. And for those of you who are students of the market, this looks like the classic sell short day in Taylor's book method. Now, in the sell short day, according to Taylor, we don't buy on the sell short day. Nevertheless, the sell short day is characterized by a move to the upside, followed by a swift move down. And this is exactly what yesterday's candle looks like. And let me show you what that looked like in the actual daily chart. And this is a 5-minute candle for yesterday, January 20th. And I used Taylor's book method plus some other averages to calculate a daily trading range. And the trading range yesterday, and I send this out to people who enroll in my trading range subscription service. I send this out daily so they can mark these prices on their chart, comprised of a support level, and that it was 44.99 yesterday, and a resistance 45.70, and the market traded well within that trading range. And of course, I always put the previous day's close because that's an important target number. So the trading range giving us a support and resistance plus a probable range that the market will trade in gives us an idea based on a calculation where the market is going to go. And that's the most important thing as a trader that we want to know. Where is the market going? So yesterday, those numbers came in at 45.70, 44.99, and the market did trade well within that. Now, getting back to the sell short day in Taylor's book method, the market opened up here at 9:30 at 45.45, traded up for the morning at 45.90, came down, and the prices stayed pretty much near this resistance level for about an hour. And then look, fell off a cliff. And this is the classic Taylor sell short day. Let me show you that again on the one-day candle. This is what it looks like. It's a long candle with a shadow, with a long shadow up to the positive side, and then boom. If you want to know more about these numbers and how I calculate them, well, the calculations take quite a bit of work, so I offer it as a subscription service. You can check it out at timelessdollar.com. The subscription service is a monthly service that you can sign up for. It's not expensive at all. Of course, I also have my regular E-mini trading course at timelessdollar.com. And I also have a free trading course where you learn how to avoid the mistakes and the pitfalls that most traders make. And I point out some of the ways that the market tries to mislead you and manipulate you into making trades that are unhealthy for your financial health. Anyway, this is Marv Eisen from Timeless Dollar. Today, again, January 21st, at Friday. You have a great day. Trade safely. Thanks for watching, and I'll see you in my next video.